All right, Prabodja. Well, it was great to hear a little bit about your background, and now we're going to transition into the case portion of our time together today. If that's all right with you. Does that sound good?
Yep, sounds good.
Okay, so let me tell you a little bit about our client. So our client is the CFO, of Cruise Co., one of the largest cruise operators in the US. Cruise Co. is considering entering the Uber luxury cruise segment and has identified a small company, Jungle Cruise, for potential acquisition. Should the client go through with this? What do you think?
Great. Let me repeat the prompt real quick, make sure I got everything. Our client is the CFO of Cruise Co., which is a cruise operation company in the United States, and they're trying to enter, they're looking forward to the acquisition of a luxury, smaller cruise company called Jungle Cruise. And they hired me to know if they should acquire or not. Is
Yeah,
it
that
good?
sounds right. Yep.
Okay, great. Sounds like an interesting case. I have a few questions here. So, what are they looking for in terms of goals after the acquisition? Like, are they looking to grow the company or looking for a particular hold? Like, how long they want to hold the acquisition for? Do they have similar kind of metric here?
Well, in terms of their goals, they're not currently in the Uber luxury cruise segment, so this would be expanding their portfolio into that segment, ideally for the long haul.
Okay, for long haul. And if you could explain me a little bit about what's the business model of Cruise Co? Like, how do they generate revenue and who are their customers?
Well, they're not. What I will tell you is they're not in the upper luxury or uber luxury cruise segment. But in terms of the model for cruise ships and everything, you can totally bring that in your framework. Would love to hear what you think about the business model and the revenue streams, et cetera.
Okay, sounds good. And just to clarify, the Uber luxury cruise segment, what's what that would be?
So yeah, so it's targeting significantly upper income uh, people. Their ships tend to be smaller, so an average cruise co ship currently is about 3,000 passengers. Um,
Mhm.
a Jungle Cruise has ships that are about 1,000 passengers each. So it's smaller, higher quality, bigger rooms, better food, um,
Okay,
things like that.
okay, got it. Sounds good. And this will be the last question that I have. The location that you mentioned is both are in the US, or do they have any other locations that they operate in?
Um, you can think of them as both U.S. companies, but as it is a cruise line, they travel all over the world on their ships, but they're based in terms of their business centers are in the U.S.
Okay, sounds good. Thank you so much. I think this information will be enough. I would like to take a couple of minutes to come up with a structure, if that's fine.
Yeah, sounds good.
All right. So, to understand if our client should acquire Jungle Co or not, we can start by looking at four different buckets. Understanding our target market, which is Uber luxury cruise market. The second one would be understanding our target company, Jungle Co. Third one would be understanding the current portfolio of our client, Cruise Co. And then finally, we could look at synergies and risks of this acquisition. So, digging deeper into the first bucket, the target market, we can look at the market sizing. How big is the cruise market in general? And the Uber cruise, luxury cruise market, is it very different from the actual cruise market? Like it should definitely be smaller because it's a luxury market. So how small is that? And then The second thing that we could look at is the market. Is there any specific market trends? Like the market, is it growing? Is it stagnant or declining market? And then we could look at the competitive landscape. How many competitors are there? Are there big competitors or more newcomers into the market? And is there any major barrier for the newcomers to enter the market? Like because they travel, there should be regulations of countries, different taxes, etc. So what are the barriers to the market? So after we look at mostly the market of the Uber luxury cruise, we can move into looking at Jungle Co specifically, where we could look at what's the positioning of Jungle Co right now, like their revenue, profit, are they profitable or breaking even or burning cash? What kind of investment portfolio do they have? Are they how much is the value of the company and how much equity is diluted, etc. And then we can look into the management style and the culture of the company, Jungle Co. Are they ready for acquisition or not? And then third is the capabilities. How many ships do they run every day? And what are the actual quality of the ships, customer feedback, etc. So all this will let us know what Jungle Co is worth, the valuation of the company. And then after this, we can look more deeper into the Cruise Co portfolio. For the purchase, they would have to have a significant investment. So where are they getting the money from? Do they have that much money to fund for that investment? What are the interest rates, etc. And then what are the other goals of Cruise Co, except for the financials? Do they align with the acquisition of Jungle Co? And then finally, we could look into the synergies and the risks. Is there any operational synergies, marketing synergies, etc.? And then the risks. So there could be brand dilution because luxury cruise is a different sector as of Jungle Co, which is looks like more of a common man cruise. So there could be a difference in the brand reputation. And then is the industry recession proof? These could come into the risks. So these are all the things that I would look at. We could start from looking at the sizing the market more, if that's fine too.
I don't have any data on the market specifically right now.
Okay. So do you think it's a good idea for me to make an assumption and start sizing the market? Or would you prefer looking at other buckets like the revenue of Jungle Co and the profit and all of those things?
Yeah, let's not size the market right now. I don't have revenue numbers. Is there something else you'd want to look at?
Do you have competitor information on the Uber cruise, a luxury cruise market? What are the other competitors and what's the share for?
No, I don't have that either.
Okay. Then I think the next thing that we could look at is the valuation of the company. How is it valued? Is it valued good enough for Cruise Co to invest that amount of money or not?
Yeah, I have an exhibit I can show you that pertains to that. I'd love to hear what you think of it.
Okay.
Let me share that with you.
can see the screen. So the adjacent companies are they competitors, or like what does the adjacent companies mean here? If you could clarify, sorry.
Well, they have the description there. What do you think?
Okay. Okay, so two of them are luxury cruise companies, and then two of them are hotel chains. And then we have the profit information and the sale price for those. Okay. So I think because we are comparing Jungle Cruises, which is a luxury cruise company, we could compare their return on investment with the other two cruise companies, which is the third and the fourth company. Does that sound good to you?
Well, I was interested. You mentioned earlier we're trying to evaluate the company, right? So,
Okay.
based on this information, how should we tell our client or give them some counsel on what Jungle Cruises is worth?
Okay. Okay. Got it. So, so we could just divide the sale price by the net of operating profit to find out the valuation multiplier and use the same for Jungle Cruises.
Yeah, that sounds like a
That's
good
okay.
plan.
Okay. So I'll go with the cruise first, the last two. So for the Valhalla cruise, it's the multiplier is going to be 950 divided by 90 million, which is almost 10.5 million. Then open sea is going to be 500 by 45, which is almost 11 million. And do you think it's worth it also to calculate the 5-star hotel chains? Or we could just conclude that it's a 11 million multiplier for the luxury chain.
Yeah, I mean, I think from a valuation standpoint, the hotel comps are probably a little too far off to be super relevant. And so, you know, you have 10.5, you
Yeah.
have around 11.
Yeah.
Um,
So
what do you
got
think?
it. Yeah. So I think assuming 11 million, Jungle Cruises valuation would be 330 million. Is that the valuation our client has been offered?
Um, we aren't sure what we've been offered yet. And so but
Okay.
that's an interesting number in terms of what we can tell our client for valuation perspective.
Yes. So if it's 330 million or higher, I think our clients should go for the acquisition just based on the valuation perspective.
I didn't quite follow that. Can you explain?
Oh, so I'm saying that if our client can offer 330 million or lower, so they
Oh,
can
okay.
be on, yeah. And then is there any other data that you have for has our client looked into any other luxury companies, luxury cruise companies? for the acquisition, like any similar competitors or newcomers which might offer them a better valuation?
No, they haven't looked into that. Is there anything else we should think about with that valuation number, do you think?
We can think about the profitability, like how that would grow. The money would grow, either calculate a net present value, or do you have any data on the estimated profits that they're going to make, so we can calculate the return on investment on that?
Yeah, I don't. I have that sort of. I think a question that you brought up earlier that would be helpful here is, we've sort of evaluated the company, right? But earlier you talked about our client, like, what are their financials? Like, can they actually afford what the company's worth? And so I'm going to share a exhibit with you and just want your thoughts on that.
Okay, sounds good. All right, so this is the profit analysis of Cruise Co. And it looks like they're making, and this is per annum, correct? So
Yes. Yep.
they're making 90 million of revenue, and the costs are 60 million. So their profits per year is going to be only 30 million. And there is very low cost synergies associated with this acquisition. And there is going to be almost like a 20 million of cannibalization, which is 2/3 of the profit that they're making. So I think in terms of a financial standpoint, looks like a much lower cost synergy and more cannibalization compared to the profits that they're making. And it's a 330 million acquisition, which is 11 times of their annual profit. So I think it's going to be a risky acquisition based on my initial hypothesis, but have they considered taking loan or from somewhere?
Yeah, they would definitely be willing to, take on some debt in order to make this acquisition. So I just got a text from the client, and they tend to want a break-even point of about 15 years.
15 years. Okay. So we can calculate the payback for this. The investment is 330 and the profit is 30. So 300 by...
Check that 30 number. Because we're
So
like, what you have 90 minus 60, which makes sense, but we need net profit, not what you have.
okay, yeah, got it. So it would be 90 minus 60 plus the cost synergies, which is 10 minus the cannibalization, which is 20. So
I don't know if is it pretty small on your screen? I think the cost synergies looks like 5, right?
Yeah, okay. My bad. Sorry. So
That's
it's
okay. Yeah, I'd say 15 for cannibalization, 5 for cost synergy.
okay. So it's um 30 plus 10. So 40 million is the profit. So the payback period is going to be,
Sorry, check that again. So you have 90 minus 15, right? For revenue.
I have 90 minus 60, which was the profit earlier, and
Okay.
minus 15 plus 5. So 35 minus 15. So you mean the cannibalization is 15 and the cost synergies are 5, correct? So
Yeah. So
I'm
you're taking
adding the yeah,
yep.
I'm adding the cost synergies to my profit and subtracting the cannibalization. Is that
Yeah.
Does that sound good?
Yeah, you're
Okay.
doing it right. I just the answer's not 40, so I just wanted to make sure how you were setting it
Okay.
up.
Yeah, I did a calculation mistake again. So it's 20 actually.
Okay, that makes sense.
Yeah. All right. So it's going to be 310 divided by 30. So it's almost going to be payback period is going to be 11 years, um, which is less break-even point is going to be 11 years, which is less than 15 years. So that way, if that's the goal, this sounds like they can acquire.
How'd you get that 11?
So I had the Jungle Cruise, the investment to be 330, and then 330 minus 330 divided by 20 is going to be the break-even points, correct?
Yeah, so just check your division there.
Okay, yeah. So it's going to be, right. I'm making a lot of calculation mistakes today. It's going to be 16 years. So it's more than 15 years. So it
Yeah.
doesn't sound like a good plan.
Okay. So so I just texted the client like about how firm they are on the break even, and they're open to that, assuming that there are other really strong benefits which we could look at maybe at a later time. But our client's concerned about risks. And I know you talked about some of them earlier, but I'm curious, like, if we try to move forward and make an offer on this, what are some risks of doing that?
Okay. So the first thing would be, I also have earlier, I had a framework based on lesser data, but here looking at the data from this plot, it looks like there is less synergies. So less synergies is a risk. Lesser cost synergies here and more cannibalization, which is also a risk. So there would be significant amount of cannibalization of the sales after the acquisition. Also, there could be a brand value dilution because
Mhm.
Cruiseco holds a different value than as a brand than the luxury Jungle Co. Um, and then there could also be effect due to recession, which
Mhm.
could be there in both the industries, but I think it would be more in the luxury cruise industry, um, because they have lesser ships and lesser capacity in general.
Yeah, all that makes sense. Anything else?
Now, finally, I think I would like to recommend not to acquire at this point, because looking at the calculations and the plots, it looks like their goal will not be achieved. The break even is reaching it after 16 years, whereas the target is 15 years. Also, the investment amount of investment required, 330 million, is pretty high. So they might have to take a debt given that the rates are higher right now. That's also doesn't sound like a good option. Overall, there are risks to consider as well, regarding cannibalization and cost synergies. So overall, I would not recommend this acquisition at this point.
Okay. Break. How did that feel?
That that was great, good experience, and I think I could have been better at the math. I was making pretty silly mistakes. Could be the nerves, but other than that, the experience was really good. Thank you so much.
Oh,
I'm
sure thing. Yeah. What'd you say?
looking forward to the feedback.
Okay. Yeah. So yeah, Prabodja, there were a lot of good things here for sure. Just to give some context, this I would say is definitely a for an MBB firm like a round one, a more straightforward round one, more of like a weed out case. And so their expectations for this type of case, because there aren't a ton of, although it's, you have to kind of figure out how to drive the case forward and what data there is and isn't, which you experience a little bit. There aren't a ton of unusual things in it in terms of numeracy or, really difficult conceptual stuff. And so this, just for everyone watching, like this is a pretty fairly straightforward round one case. But yeah, there was a lot of good here. I think your strongest part, and we'll go from the beginning, but I think your strongest part was your business insights and the framework. I felt like you had a pretty strong framework, and we'll go into that in a little bit more detail. And I think you had good insights. You just kind of got stuck on the math a little bit and understanding or remembering, like, okay, why did I ask for this data and how does it change the answer? And so we start from the beginning. So this took about 30 minutes. Which is, you don't want it to go longer than 30 minutes. I feel like a really crisp version of this case could have been, I don't know, 23 minutes, maybe a little bit quicker, because there were only really three major sections of it besides the framework. Your intro was good. I think sometimes people take a long pause after they hear the prompt, and yours was like probably under 5 seconds. You wanted around 3 seconds. And you did fine. Like, I don't think it was the crispest intro, but it's not something that you're going to get dinged for. It's a very short prompt, and so you can reflect that in your response. I felt like your questions were fine. I don't think all of them were necessary. I think clarifying the goal was a good question, and I liked that you didn't just ask like, what is the goal, but you gave some perspective or hypotheses on what it could be. Are they trying to expand? Is this a more short-term investment? I don't know how much a short-term investment would make sense for this specific case, because they're buying into a totally different segment for the most part. But yeah, like that's good whenever you ask a question to give some sort of perspective if you can. I think asking for the business model when it's a pretty obscure or niche industry is valid, but I feel like cruises are fairly well known in popular culture. So I think if you're going to ask about that, I would want you to give some perspective. So I'd want you to say, okay, when I think about cruise ships, they're going to sell tickets. They're going to have, casino. They're going to have a spa. Like, I assume that these are sources of revenue. Are there any other sources of revenue I should be aware of? I feel like when you don't at least give some idea when you ask that question, it seems a little lazy. I'm not saying that that's what you were doing, but that can be often what it, comes across, which is why I said I'd love for you to think about that in your framework. And then, your question about what makes the Uber Uber luxury market unique, that was a good question. I would say you could probably called one or two of those questions and gotten the info you needed, but they were fine. One thing here, and yours was fine, but I just want it for the group. And this is just my opinion, so I feel free to get other people's insight on this. But you transition to your framework saying something like, I would like to take a couple of minutes to come up with a structure, if that's okay. And I would just say, consulting organizations typically are pretty flat in terms of the dynamics in the meeting. So instead of asking for permission, I think it's just fine in a polite way to be declarative and say, okay, I'm just going to take a couple of minutes to plan my approach and then we can jump in. So don't feel like you have to be super deferential and ask for permission all the time. Your interviewer will be very assertive and tell you if he or she wants to do something else instead. So, okay, your framework, 2 minutes and 23 seconds to make it, which is in the ballpark. You're kind of pushing that upper limit. And so just know the longer you go, the more quality I'm going to expect. But actually your framework was quite good. So I feel like this was a great example of definitely, if it were grading on a scale of 4, this would definitely be a 3, maybe a 3.5 or higher. I liked how customized it was. It was a fairly traditional structure. So if you use something that's kind of a structure that you memorize, it's really important that you customize it, and you did. It was clear that you were talking about cruise ships. You wove in some hypotheses, I'm guessing that this market will be smaller because it's Uber luxury. You talked about barriers, and you mentioned because of travel, there could be government, political issues, regulation. So I really liked your customization. I thought you did that well. And I felt like when you got to your second bucket, I was hoping that you would say why you want all this information, because you kind of listed I want to know their revenues and their profits. Are they burning cash? I want to know their investment portfolio. But then you finally got there. You're because then we can evaluate the company. And so I would have, ideally, you could have said that at the front end, we need to know how much this company's worth. But you got there at the end. So that was good. You just don't want to, they know why you want it, but they want to know that you know why you want that data. And so it's good to kind of weave that in there. And then, I felt like the rest of your framework was strong. You told me where you wanted to start. I didn't need to ask you. So way to drive the case forward. And then I thought once we transitioned to the first exhibit in the math, you did a great job of hanging in there. You asked me for market information. I said I didn't have it. You asked for something else. I said I didn't have it. And I didn't really give it to you. And then you took a second, you look back at your framework and you said, well, let's think about evaluating the company. So that was great. Sometimes they just won't tell you what to do next, and you hung in there. And so that was very good. For the exhibit, I think you got there. I think you just lost track of what you had asked for, because you had asked for the right thing. I want to evaluate this company. And then for the first minute or so when you were looking at the exhibit, you kind of stopped talking about the valuation. And so I would have liked it if you had I think you would have been much crisper there if you had just remembered, okay, this has something to do with evaluating the company. And I was wondering, maybe she doesn't know what multiples are, but then you clearly did. And so I think if you had just kept that more front and center, that would have helped you in that section. For the next one, I think you just got a little tripped up with the actual calculations. And so that's just something that drilling will help you with. I think the concept there was you in order to get the profit that you use to calculate the break even, you need to incorporate cannibalization and the cost synergy into that net profit number. And so that was just the conceptual thing that you need a little bit of help there with. But I liked that you gave perspective on the numbers throughout. You said, okay, the cost synergy is lower than I thought it would be. That's not a good thing. This feels like a more risky acquisition in that regard. The one thing I would say here on more of a soft skills side is a couple of times you said, I don't remember exactly your exact language, but I'm making a lot of calculation errors today, or you apologized. And I would say you tend to not want to apologize. Just say, oh, thanks for that. Or I'll keep that in mind going forward. So you express thank you and acknowledge the correction or the help, but don't draw more attention or don't be super apologetic. I feel like that just draws more attention to it. And then we'll move on for the sake of time. So the creative question or the brainstorming question, I think one trick is to recognize when these questions come up. And this one was a little interesting because it was something you brought up in your framework. So I liked how you acknowledged that. And then you tried to add to it based on the information in the case. Couple of things here. They want you to be structured with these. So even if you have to, doesn't need to be as sophisticated of a structure as the earlier framework. And if you need to take 10 seconds, I wouldn't say take more than 10 or 15 seconds. But if, you say, I'm going to take a second to think about this, I want you to write down at least 2 buckets. And it could be financial, non-financial, internal, external. You want to have something more creative than that, but it's better to use one of those frameworks, short-term, long-term, to group your ideas and communicate them in a structured way. So I would have loved to see some structure there. You could have just done financial, non-financial. And then 2 other things. Be prepared for anything else. When I asked you anything else, you jumped right into the recommendation, but it's pretty common for them to want to press you, even if you're doing a great job with it, for more ideas. All the ideas you had were good and defensible, but I just wanted to see what you would come up with if I asked you for another risk. And I might have asked you again, but you jumped straight into the recommendation. So I think although you started off minus the structure, pretty strong there, that probably, they might have, if they had more time, come back, no, I want you to think of more ideas, or they might have marked you down a little bit because you just moved on. So just be ready for the anything else. And I've done this with a few people, and sometimes they'll say anything else and say, no, that's it. You really don't want to do that. And so the nice thing about having a structure is if they say anything else, you can just, without making a new structure, look down and say, oh, I can think of another financial risk or a non-financial risk. And a good way, you always want to drive the case forward. And so once you get done with brainstorming, I want you to prioritize or pick one of those things that you came up with that you can look into more. So, I really want to understand why those cost synergies are so low. How confident are we in what we can capture? Are there ways that we can increase them? And I might not have data for that, but it shows me that you're thinking through to how to continue to refine the answer. Your recommendation, I like that you started with the answer first. This case, you could have kind of gone either way, depending on how you round the multiple. It gets closer to 15 years, depending on how you round. So there's not one right answer here. Totally valid to say this is a risky acquisition. You gave the answer first. You had data greater than 15 years break even, have to take on debt. You brought in some knowledge of higher interest rates now. So I like that. The one thing I would say is, a risk or next step, you want the risk to be something that kind of makes you question your answer a little bit, not in a way that makes you change it, but the risk that you gave was kind of what you'd already said, cannibalization. I forget what else you said. But what would have been nice here is something that we would need to consider is if we don't make this acquisition, would one of our competitors make this acquisition and get a leg up over us? So just want something more that is an extenuating circumstance that you would need to check into to feel more confident about your answer. Does that make sense? But overall, yeah, good business sense, great framework. I think you have, the potential for sure on those calculations if you keep those numbers straight. So overall, good job.
That was super helpful. Thank you so much.